right, guys, here to help us, we've got the investment pros, Matt McCall, Heather Herzog, still bragging about her JCPenney call, Joni Courtney, and Jim Frischling. Let's do it, guys. Let's dig into the first real deal. All right, listen, the market did end higher, as Nicole talked about. We snapped a two-day losing streak. What do you make, Jim, of the session overall? Because it felt like it could have gone either way to the very end.
Yeah, and I think you started the show off with it. It was, I think people are waiting for tomorrow. Jobs report is what it's about. The talk of Iran and the agreement, to me, is somewhat noise, and it's somewhat of a red herring. To me, I think it's about earnings. It's about what the company's going to be saying going forward. And in terms of, today, I think people are still trying to debate good news is bad news, good news is good news. I'm in the camp that good news is good news. The Fed, to me, is becoming less important. So to me, I think people are gearing up. Let's get a good number tomorrow. I think there was a decent amount of buying, in my opinion, today, and the market held up fairly well.
Well, trading sideways, Jim, what breaks us out either way on the upside or downside? I mean, because I think that there's still a sense that so many people have no conviction. Like Matt has all the conviction in the world. I think the majority of players on the street have no conviction, but they're ready to go whichever way breaks out. If we break out to the downside, sell everything. We go up to the upside, buy everything.
I think it's going to be what the companies have to say, and it's going to be starting next week. I know a lot of guys are already talking down their books about the strong dollar, and we've talked about it on your show, hurting earnings. But the fact is, for all the reasons we just discussed, I thought the market would have been down today, and it wasn't, which I thought was actually a very positive sign that despite these reasons, they managed to kind of hang in there and put up a gain.
It's earning.
Jim, we were promised a manufacturing renaissance. That didn't happen. It hadn't happened. Certainly probably won't happen with the strong dollar, even though we had that really surprising trade deficit number. So where do we go from here?
I mean, look, I think each of these industries, each segment, you can segment all aspects of the market, and it comes down to supply and demand. If there's an excess supply of talent, then as Matt said, there's no reason to be raising wages. But where there's skill gaps, where there's a lack of that supply, there's going to be a big demand for it. You're seeing all sorts of sectors that are ticking up. I think we're going to start seeing it happening. I see it at my own firm. The good news is if you're making more money, you can pay more money. But don't think of any of these companies as charitable organizations. They're going to raise wages just because it's a nice thing to do. They're going to do it if they can afford to do it and if it's good for their business.
The marketplace is forcing it. So that brings us to our next real deal. McDonald's now joining this list. Now, here's one of the things. It could be a function of the market. It could be a function of business, karma, maybe society. Whatever it is, we are seeing more and more of these, at least lower-end names, companies say, okay, we're going to give a raise. Some of these stocks have moved on this. Target's up pretty nicely. In fact, almost every name on that list made a big move right after they announced these higher wages. Coincidence? If it's not, what should the viewers be thinking about buying? Would you buy McDonald's on higher wages? You know,
on McDonald's, I have to say, I think it's a little bit of a marketing campaign. It was only corporate-owned stores, okay? 80% of McDonald's.
The NLRB is probably going to decide within the next couple of days that on a big decision that will lump corporate McDonald's with the franchisees.
Yes.
So obviously they're not going to do it themselves.
Yes, I think it is a good thing for McDonald's. In the same way I talked about on your show for other reasons, but I want to talk about Walmart specifically. They raise wages. You put them up. They have the highest number of employees for a company that did raise wages. It's a competitive advantage. It's going to create barriers to entry for others. It's going to reduce their training costs. It's going to improve employee morale. That's going to result in better service. I actually think it is a competitive advantage if you can afford to do it. And I think in the case of Walmart, they can. And I think it's going to be a meaningful benefit to their employees, and it's going to actually result in the bottom line. They're going to get a lot for that.
All right. You spoke to Walmart's management yesterday.
I did, and they made those exact points.
Boom.
And apart from because I try to not really marry what Walmart says and kind of use my own analysis, but it's very true. Walmart, especially in Starbucks, Starbucks also are raising their wages here.
Now, Austin on Twitter says, I mix trading, longer-term investing, was looking for another quick 10, 12%. American Airlines provided before, so is Grub Hub a better choice now? Well, Grub, you're going to be chasing it a little bit, but I happen to like it. My subscribers in it were up nicely, but I just think they're doing almost every single thing right, and I know Jim loves them as well.
Full disclosure, as someone who's involved with restaurants, I sometimes think they're the necessary evil or the evil empire, but I do think they're expensive, and I do think competition is going to get fierce. I also think a lot of their growth came from the acquisition of Seamless. So to meet these kind of, price targets, they're going to have incredible growth, and I think it's going to be hard to maintain that. And also, you got Yelp buying Eat24, you got Priceline acquiring
more competition, more competition. What do you think? You know, the irony, of course, Jim, is that a lot of times people don't want to chase. Given a chance, though, often it's better to chase a winner than trying to pinpoint when a loser may bounce.
Yes, ride your winners. But to Matt's point on this one, the home sector has done fairly well, and this company has lagged. bag. I don't know how much more you want to chase this.
Yeah.
Stick with this.
We're going to get Steve Cortez in next week to talk about that. All right, Matt. But I do want to ask you guys real quick. The market seems just to be relieved. I mean, we know that the stock market not necessarily moved by global sympathies. They do get worried when geopolitics takes over, but the market seemed to be just happy that this might be over, Jim.
Well, I think the price of oil is being dictated by the supply and demand equation, and obviously with Iran coming online, that's going to increase the supply. But the fact is, I think you're seeing the U.S. rig count has dropped, and as a result of that, I do think we are now we're starting a bottom. That's right.
So now the supply-demand dynamic might change.
Yes.
Oil breaking through 51, guys. I think it's going to go at least north of 55. Okay, good point, Jim.
I'm a little less bearish than Matt, but I'm far less bullish than all of you. I'm at 230, and we're not going to see a change in the employment rate.
Guys, this drought and